Hello traders. Today is Friday, November 15. Let's talk about market and our portfolio. Uh, you know that market has dropped today, dropped hard, and from last Friday, S&P down about 150 points, which is 2.5%. Also, VIX increase last Friday it was about VIX was 15. Right now it's close to 17.5. So it's actually full 2.5 points. And let's see how our portfolio performed this week. So right now we can see that our total ES position about 2800 plus, but we close couple of positions which is not counted here. It's V3 which we closed and it's more than $2,000, 2050 actually, and we closed C3 short puts which had a total profit 1500. So altogether we have to add to this number 3500, a little bit more. So altogether, to compare with last Friday, it's 6500. But if I remember correctly, it was about 8700 last Friday. So our portfolio is down a little bit more than $2,000, which is approximately 1%. If we count all our position, looks like it's for 200,000 account size, so it's 1% decline. Well, I don't think it's a big deal. We right now gonna check our position separately and see which one is under pressure most, and probably on Monday, I wouldn't like to touch it today, but on Monday we'll see if market continue to decline. We're probably gonna start doing our rolls how we plan. But let's see first which one is under pressure. Our ladder A, it's not bad. That's how it's look like, and let's see where's our short puts. Short puts is at delta 9.5 right now, so I don't think we're gonna touch it unless it will be some huge decline of the market. So let's see ladder B. It is right now also safe. This is how altogether B1, B2, B3 and B4 looks like, and our closest shorts 21 DTE at delta 7. That's even safer. Next one, we will see what we have. Let's see our C ladder. This is probably the worst one. We approaching our break even, lost our profit there, but our short puts is 35 DTE at delta 15.8 right now. So it's probably candidate for next week for rolling if market won't bounce up. Our D position should be a little bit better. Let's see, D1, D2, D3, D4. Yes, it is. We have short puts, 35 DTE. Yes, at delta 12 right now, so it's a little bit safer. Let's see our balalaika trade. It's interesting how it's performed. If you remember, we just rolled it yesterday, one of short puts. Yeah, we virtually lost our profit. Right now it's about $100 in plus, and our short puts in pretty safe condition. Right now it shows just delta 7 I don't believe that it's so low. Yeah, but it's fine. Probably we're gonna roll it next week when it will be will lose some more value, but it's pretty safe. It shows 7, just delta 7. The another one which we roll, let's see where it is now, here. Yeah, it's a delta 9, also in good shape. And we have, no, it's actually that one which was originally 60 DTE. Right now it's 46. 77 DTE, which we rolled yesterday. Yes, and it is at delta 13. That's still quite safe, and I don't think we're gonna need to worry about this position at least next week. Let's see how our violin position look like. V4, well, it's good. Our shorts at delta 4.77, which is very safe, and V5, it's actually close to zero profit. We lost our profit today, but it's safe. It's also, our delta is around delta 8, so I don't think we're gonna have trouble. We opened yesterday mini violin, if you remember. That one is in trouble for sure, because we just opened it yesterday, and it shows about $600 loss after today's decline, and our short put is at delta 18.5. So again, we won't do it today, but on Monday, if we won't get bounce up, probably we're gonna roll it down and convert it to regular violin. If you remember, idea of that trade was to set it up delta hedge and just sell 130 DTE short put to pay for that delta hedge, and the expectation was if that short put will expire and give us all credit, we will get virtually free delta hedge, which we're gonna keep to protect our portfolio. If we roll down our long puts, how we usually do, it will be for sure no lose delta hedge. It was a plan, but if we need to roll it down when short put reach delta 20, we will roll it to 60 DTEs and convert it to just regular violin, where we sell usually two short puts at 60 DTE at delta 10 and have 500 wide delta hedge. So I think it's gonna be good violin trade after market decline with higher volatility, and we will get sooner or later it in profit. Let's talk about our oil position. It's down today. Oil itself going all the way to 67, virtually at the lowest level for last 3 months. But our position still in good shape, and I'm pretty sure it will sooner or later give us tail profit, because our short puts, it's pretty far. The closest one is 58, which is delta 15, and the second one at 54, which delta 8, and they protect with 2 hour long puts, so shouldn't be a big problem. Also, our TLT position, it shows pretty good profit, but I don't trust OptionNet Explorer. For some reason, they're not updating well TLT option positions. I don't know why, but I checked just it from my tested rate, and it shows my position is up approximately $100. So it's not bad. Even TLT is kind of at low level about. Can you see it's not updating? What is TLT trading right now? Let me see. It is at 90.36. I'll check. Yeah, it's just bouncing up from the lowest level. Today about 50 cents. And our position already in profit. So I don't think we gonna... don't forget that our idea of TLT just to be a sign and protect with long-term options if it will continue go down, and replace a little, not completely, but some of our bill position, because TLT has very liquid options, and we can get virtually same kind of dividends, about 5%, plus we can get additional profit from our options to combine with long position, stock position. Also, if you remember, we have MES position. Let's see how it's looked like now. We have two expirations. One of them is we have 4 altogether ratio spreads combined together, and right now it is at 35 DTE, and it's pretty close, even market down today, so we are very safe, about $500 in profit, and I'm pretty sure that probably maybe next week we're gonna reach our expected tail profit line. But the second one, which we open just the first ratio spread this Monday, it's because market is down from Friday, and it is a little bit down, approximately $50 right now. We will see. Usually, if you remember, we add new tranche of ratio spreads every Monday, but if market continue to decline, probably we will skip this week and see how it's gonna behave, and even maybe if needed we'll do some protection roll here. That's it about market and portfolio. Again, guys, I wouldn't like to touch it today. Market is down, volatility is up. Let's make our theta work during weekend, and if market won't bounce up, we will do our regular short puts roll down and out if they reach delta 20, and pay for that roll with our hedges. We have lots of them, so we can handle this or even much bigger market decline. I don't think you need to worry about that. Now let's talk about questions. You have a couple of them. I saw Louis asking, with your ratio spreads like you have on oil, why not also sell the call side, even if way out of the money? It tends to reduce the buying power requirement for the trade, at least for me on tested trade. So it is money left on the table if not taken. I recognize there is a risk in all positions taken, but this one seems pretty safe given the direction oil is heading. Yes, you can do it. I do it myself time to time, but I usually do it with oil if oil run up to some resistance level, and I think that it's pretty safe to open ratios spread from the call side. But regularly I don't do that because I don't like to get risk from both sides. You know that we usually with commodities do take risk from lower side because it's kind of down move is limited, but up move can be very fast and far, and also volatility will increase so much, you can be in trouble with call side. So be careful with that. Again, I do it, but usually when commodity already run up far and fast and volatility is high, this time it's much safer to open ratio spread from call side. Not right now. I don't like this idea. Johnny asking, I am interested in your thought process regarding approaches to increase delta when buying power is near max desired range. I believe overhedged describes this scenario. How do you recommend prioritizing hedge reduction? Well, Johnny, I don't think that if your portfolio delta is low, yes, you can. But if your buying power is at maximum level, and at the same time your portfolio delta is low, I don't think it's a reason you are overhedged. I think your short puts is at extremely low delta, and it's time to roll them out and up in delta and increase a little your portfolio delta. But hedges itself should reduce your margin, not increase it. So reducing hedges, I don't like that idea, because you see what's going on today. Market is declining and we don't know how far it can go. It's always good to have hedges, especially when you're losing from hedges. Probably they're so cheap. If you close it, you won't get much profit from that. But reducing hedges can be dangerous. So I think you will be very happy someday when market collapse and you have extra hedges just to pay, cash them and pay for roll your problematic short puts. That's it, guys. I don't have any questions more. So be safe, have a good weekend and good evening. And again, don't worry about today's decline. Yes, we lose a couple of thousands of our profit this week, but we should expect that. And this is why we use our hedges for this kind of event. So let's see and what's gonna happen next week, and be ready. Probably we're gonna be busy to roll short puts and close some hedges. Thank you very much. Bye bye.